Friday, August 29th, the end of a week and the end of a month, and before a 3-day weekend. This is Market Analysis Stan Ehrlich. We have been at very precarious price ranges the last few days, particularly noticeable in the MES or the E-mini, either one, because of the bearish bull trend line that we have been traveling up to and bouncing off of. Today in particular, big break. New lows for a couple of days, new low closes for a few days, but no major reversal, no major downside breakouts. Just the potential of perpetuating itself and dropping off a lot more. Now, the lot more needs to get below 63.61 on a close, probably next week. Then we've got something going. And the major support area is very, very significant, 62.50-ish. Below that, you've got new lows for a couple of months. And a lot of indicators, et cetera, a lot of people are unhappy, blah, blah, blah. So that would perpetuate more likely than not a next major move down. Remember, I'm looking for the beginning of the downside bear move into the October lows, which I'm still going to create a report for. All you have to do is email me at info@ersignals.com, ask for the October low report. You got it. Free chart. So, is this the beginning? I really can't be sure. It looks like it's quite possible. 5-minute chart does not really lend a lot of help to that. I need to break below the lows of a few days ago. Now, the same statements apply to the spider as you would expect. But remember, the spider has been closing a new historical high ground for a couple of days and then pulled back a lot today. But again, we need to break below 632.80-ish, which would probably cause it to test at least the approximate 620. Below that, watch out. Next, QQQ did not make a new high for the trend, did come up to approximately the same highs that we had back on July 31st when we had a bearish engulfing, which worked great for a day. Then we got overbought, pulled back one more time, and guess what? Almost the same number of days have evolved from the first bearish engulfing, which I claimed to be a first shoulder high, July 31st, to the head of the formation on August 13th, to yesterday's rally high, August 28th. Now, if that's all true, this is going to be the neckline. And a close below that should generate a modest, minor, not that big a deal, downside objective of from the top of the market down to where the neckline is right there. That's the depth of the formation. And from the potential breakout day, let's just guess. We might get down, and it's going to go a little higher over time, back into these support areas. Not good enough. But if they don't hold, old gap being closed, support area, then we've got that test of a variety of things going all the way back to April. Markets will snowball. They'll tend to break one thing down and the next and the next and the next, technically. And we're looking at NASDAQ. Same timing, same rally high level for shoulders, approximately the same number of days from the high, symmetrical. Neckline I already drew in apparently yesterday, and we're coming down to it quick. By the way, a classic downside breakout oftentimes involves a gap below the neckline. I doubt we're that far. We're too far away for that on today's close. problem. But if it did, that would be classic. And stay below, bounce, keep going down. Next, NASDAQ, really can't tell much on that, sorry. The YM did not make a new high on the Dow rally yesterday, up against an old resistance level I have had here forever, probably. Moment. It stems back to the highs with the bearish engulfing red sell signal on February 3rd, I think it was, which is great. It was the top of the move. And the previous highs before that. So it's a major resistance area that we topped out in overbought conditions a few days ago already and tested again yesterday and dropped down today. So it looked like there's a good chance we could come down a chunk more. First possible support would be the lows of just a few highs of a few days ago. And so far, well, we pretty much came very close. But if that doesn't hold, well, we're entitled to drop off to at least the middle of that stuff. Probably down to around low 40s. Now, that level again and again and again. Very early in the turn, if I'm right, I know what to look for if I'm wrong. Any close or settlement, etc., above previous couple of week previous highs, I'm wrong. And we'll resort back to being another wave up situation. Next. Russell, I can't say too much. We did top out yesterday at a resistance level, and it's starting to drop back. But this is a very wide, broad level that has topped out in that broad area for a long period of time. 1920, 1921. Yeah. Huge. So here we are again. And until we get way above that, I got no long-term bull market. I got a bull market that's about to turn down probably. Next. Bonds. As you know, I think it's developing a long-term bottom, but the next short period of time, I am not very solid on. Sideways to lower, a little erratic in my opinion. I don't think we're going to get a bullish breakout, which would be above 116. I think we're going to hold on the next dip down into the ballpark of 111-ish. Notes. 5-year. New high closed yesterday, dropped below previous highs and closes today. Maybe it's a bull trap. Maybe it's a double top. I can't tell yet. Significant resistance in the broad area where it's reached. Hang on. We'll start right there. And come down to these. Nope, a little lower. That's it. So we are, in that general area of resistance, right in the middle, at the moment. Wouldn't be surprised if it turned down. There's nothing, no evidence or, no reversal yet. Now, crude. Rock in a hard spot. Don't know what to do. Next, natural gas continues a good bounce off of a low, but wasn't quite oversold real close. We've already gotten about 40% down into the minimum downside objective, which is 1.3, from a complex head and shoulder top that's been working great for quite many weeks and months. Original breakout was June 25. So I keep getting bearish all the time because I don't expect the rally to go anywhere. Now, heating oil. A whopper of a drop off a few days ago, a mild bounce back, and all of a sudden, new low closes for 6-7 days. About to make new lows in my expectation and challenge this last break low. The long-term top still stands. We had a huge early reversal, bearish ER signal on 623. So I'm looking for a test of at least 2.18 and probably break, because it will also be breaking these lows to support let's look at 2.1, maybe lower. Next, overbought again in the same resistance area where it got overbought several times before. Even gave us one great bearish engulfing ER sell signal before. Well, what else do we have to say? I think this is going to top out. We're overbought in the resistance area where in the historical evidence recently hasn't broken through. But what if it does? That's very bullish. We have a long-term bottom building if the breakout occurs several months, and it'll probably push itself way up within a month or less. So this could be a fake out and not going to top out. You have to wait for some indication that you like to use, that you're trusting, to tell you that the market is starting to turn down in order to move in without too damn much risk. Next, way up, silver, new high close. Is this a blow off top? Too soon to tell. Looking for higher levels. Next, we're still in a rock and a hard spot in platinum near the tops. Wouldn't be surprised if it dropped right back down again, but watch like gold for some sort of upside breakout-ish. I'm sorry, copper doesn't seem to be doing too much. Just basically coming back up into resistance. I don't know. Let's wait for some sort of something. Next, soybeans. Now remember the grain complex I've been saying for maybe a couple, 3 weeks now has had several indications of maybe a long-term bullish bottom. Now I will have to say sometime, generally speaking, in early part of August, that's when we got our bullish engulfing buy signal in soybeans on August 11th. So far, so good. Today, a new low yesterday for about a week. Boom, we rallied back up. It's one of the highest closings for the trend. Excuse me. I fully expect the market to at least test 1063 and push its way toward, if not reach, next week at 1076. If we get above that level on a closing basis, then that presents a whopping important long-term 1100 resistance area. Any closes above that, especially if it happens fairly quickly, you'll be extremely overbought. You would look for a long-term breakout to be extremely overbought. Good. But all of a sudden, that sharp move up is probably going to retrace. That's the proof of the pudding, how the retracement goes and where it comes down to and how long it takes. Next, soybean oil had a bullish engulfing right smack at the neckline of a head and shoulder bottom. We've already been halfway up to the minimum upside objective of 62.62. Here is another dip down toward the neckline. Will it hold again? Well, if you like yes, you should be buying the heck out of it yes today, basically, because it closed about unchanged after dipping down close to the neckline, what I would consider to be a buying zone, so to speak. Good. Not great, but let's start, I think. Next, we closed a little higher after a minor new low on soybean meal. The trend has been up for about a month, all of August, basically. We didn't get any buy signal at the bottom. It was oversold, but the resistance level we were looking for to stop the rally did in overbought conditions. We have had a little bit of a dip. I don't know if we can do more, maybe back down to here, which would be 279.70. That wouldn't kill anything bullish. So somewhere around here or maybe a little lower, I think we're going to turn and bang back up against this resistance and start to eat into it, if I'm right about the long-term situation, and start to get into the overbought condition. Overbought resistance area above the market. Next is the corn market, where we got a bullish engulfing at the bottom of the break, and here is a new high for the move up. That's a new high now for about a month. Not bad. We're not anywhere near overbought, not too far away, but not super close. And that allows for probably in the neighborhood of a 10, 20 cents more of a move. Wouldn't be surprised. Can we get all the way up to close this gap? And I'll pull that over to the right a little bit more. Maybe. That's one of the first levels I would look for maybe a beginning of a retracement. There's also a chance that this could be involved in the future into something. So, what about wheat? Wow! At the bottom of the market so far, we have a bullish engulfing ER buy signal point blank. And I didn't even, well, no comment. New high close, almost for the trend. Not quite a new high, but a new high close since our bullish engulfing ER buy signal. Good. Nowhere near overbought, no problem. Could easily punch through and test and probably reach. And I'll pull it over a bit. The next important resistance zone, so to speak, which are important previous lows. Not going to be surprised. I am expecting it. What about stocks? Shell. Resistance zone, overbought conditions as of today for the first time. I think it's about to turn down. Next, we've got Apple. So far, no new highs. Still generally in a resistance area. No comment. I need some kind of reversal. Don't have anything. Could get a little higher. I would look for, of course, for a bullish breakout above resistance if that is what it can manage, or a close below 2 weeks ago's lows to be a little more bearish. Next, resistance in general has been stopping now Tesla on its rallies, although they are minor new highs since the beginning of July, actually almost June, but we haven't gotten above the June 23rd high yet, which is super close and tested 2 days ago. Dropped off yesterday and dropped off a chunk today. Nothing important about today's range. Could easily test this bull trend line. That's the one to watch for the moment. Below that, on a close, you're going to come down to these support levels, and we'll see if it can stair-step its way down further. I wouldn't be surprised. You know how I feel about the indexes in general. We have resistance here on NVIDIA. That's considered a double. Some people might want to call it a triple top. I don't, it's close. So the key here is to close below 198.90-ish, below the low on the date of August 20th. That's going to cause a bunch more bearish movement, probably off to 153-ish. Next, MES, we're back to the beginning. You guys have a great 3-day holiday. If you want the October low report, ask for it. Info@ersignals.com. Have a great 3-day weekend.